Eli Lilly out with its first quarter results this morning. The company missed on both the top and the bottom lines, and it's lowering its forecast for the full year. Joining us right now to break down the numbers is David Ricks. He's the CEO of Eli Lilly. And David, the stock is under some pressure this morning. We were just looking at it last I saw. It was down by about 5%. What happened during the quarter?
Well, it was a kind of a complicated quarter for us. But, bottom line is we grew our core business, the underlying business of the company, 7% on the top line. Expenses grew 3%, and it was that yields a good picture. That is all kind of buried underneath a couple factors that I think make Q1 of this year challenging to look at. One is last year, as the pandemic started, particularly in the U.S., and particularly with diabetes patients, we saw people fill up their medicine cabinet as the shutdowns were occurring. So the compare is difficult. Because last year's Q1 was so good. That washed out in Q2 and Q3 of last year, so we expect a better Q2 compare this year. Secondly, we had a number of puts and takes with the U.S. government on our COVID antibody treatments in terms of rearranging our agreements through the course of the quarter. That's difficult for the street to have visibility into. I think that was part of the downside. And why we're lowering the top end of our guidance as well is because COVID therapies are reducing in their need as the virus is being arrested by vaccines in the U.S. And then finally, cost growth. We spent $200 million in R&D on those same COVID therapies that was really unplanned and not communicated in expectations, and that's part of the story, too.
Part of that, that lower drug demand for the COVID-19 drugs that you mentioned, I guess I'm just wondering, because for the full year guidance, you had been saying that you were going to be looking for $7.75 to $8.40 a share. You've lowered that to $7.80 to $8 a share. So you missed earnings by 25 cents in this quarter from what the street was expecting, but you took the top end down by 40 cents. So does that indicate to the street that there could be lower numbers than they're anticipating in future couple of quarters?
No, that's really all due to the COVID therapies. So we lowered really the range. We had said about $1 to $2 billion in COVID mAbs when we set antibodies, when we set guidance in December. December feels like a long time ago. Our ability to forecast that part of the business is challenging. We're now saying that we expect at least $500 million lower range on those COVID therapies this year. The core business, and we'll reinforce this today, is exactly where we thought it would be. 7% growth in the quarter. We expect that to continue to accelerate throughout the year. So we tightened the range, actually, Becky. So $7.80 on the bottom, up from $7.75, and then $8 from $8.40 on the top. That lowering at the top is really due to the COVID therapies.
The COVID therapies, why is there less demand for it? Do they not work as well as anticipated? Because you still hear about how COVID is running rampant in lots of areas of the globe.
Yeah, actually, our ex-US side of this picked up quite a bit. Europe, other countries have been increasing their purchases of this. It's been a little slower than when the U.S. government, which is one big government that can moved last fall. The U.S. utilization, although Lilly's antibodies are about 75% of all antibodies used in the U.S., is dropping as cases drop, and that's what we wanted at the beginning of this. In Europe, we're seeing good use. And in some countries, like we have a crisis in India, we're not approved yet. They have a different regulatory process. We've submitted. We're hoping that these can get to patients. It just hasn't happened yet. Those will be lower priced or no price. In the case of India, we've offered to donate the antibodies. So the volume will be there, but the pricing will be different. That's not our core business. That's important to emphasize, but had an effect on this quarter's performance.
Shepard Smith here. Thanks for watching CNBC on YouTube.